Hi, Mark. Thank you for joining us today.
Great to be here.
Tell us about Pacific Private Money and how your company is different from conventional lenders.
Well, at Pacific, we're an alternative real estate finance provider. We're alternative to banks, and we're known as a private money lender. Sometimes we're referred to as hard money. But the biggest difference between us and conventional lenders is that we have amazing flexibility when it comes to decisioning and speed. And that's something that banks don't have. Banks really are limited when it comes to decisioning. They have to make decisions based on numerical inputs, and they can't compete with us on speed. And so that's the difference between us and conventional. But we're also different from most private lenders in that we're one of the few private lenders in California that actually funds consumer bridge loans. Most private lenders stay away from consumer-related lending. They focus on fix and flip and business purpose. But we provide the financing behind a lot of the buy before sell programs, which are really popular now with realtors and with home buyers. So that's the biggest difference.
Okay.
So I've heard the term hard money being used for private lending, right? And that term kind of comes from maybe a different time, so to speak, more on the commercial side. And I'd like to think of it more as easy money compared to going through a conventional lender for unique situations.
Well, the two most important things for most borrowers are flexibility in decisioning and speed. Like I mentioned earlier with banks, thanks to Dodd-Frank or no thanks to Dodd-Frank, you're now really a series of numbers, and those numbers have to line up for them to say yes. And bank financing today often takes anywhere from 30 to 45 days. They're really busy right now. And as we know, we're in a market where real estate transactions are happening very, very quickly if you want to compete, particularly with cash buyers. We have a shortage of inventory and a high demand for housing. So many home buyers, particularly self-employed or people with any kind of difficulty proving their income, what ends up happening is that they find it difficult to get a bank to say yes on a purchase money loan. And so if they want to compete with the rest of the home buyers out there, we're finding more and more people are turning to the private side, the consumer bridge loan, to be able to help them affect and capture that property.
We've seen that in residential real estate where some of our self-employed clients are having challenges getting their loans approved going through conventional lending standards and guidelines set out by Dodd-Frank. And I think what happened also is COVID, the pandemic, actually exacerbated the challenges that self-employed borrowers have, where the underwriting guidelines for conventional lenders were actually more stringent as a result of the pandemic. And that's still with us today. That really hasn't subsided yet.
Well, the Bay Area actually has a higher percentage of self-employed and 1099 contract employees than pretty much any other part of the country. So really here, more than any other area, there's a need for an alternative way for a home buyer, prospective home buyer, to buy their home. And so that consumer purpose bridge loan that we've been doing now for almost 10 years now, since the advent of Dodd-Frank, has been a tool for realtors to help their home buyers, particularly self-employed, capture that next home.